It's the midweek edition of Business Morning. Good morning, everyone. Welcome to 55 minutes of current and relevant business talks. I'm Amy John Mekwa. We start business from the global space, where oil prices edged lower in early Asian trade on Wednesday as President Donald Trump's erratic tariff policies raised concerns about weakening global economic growth and fuel demand. So we see a drop in Brent this morning. 17 cents is what it lost, and that's about 0.26%, $64.08 a barrel. WTI is also down 0.2% to $60.30 a barrel. And we know that all of this is connected, of course, to President Donald Trump. Trump tariffs on imports into the United States have made it probable the global economy will slip into recession this year. A lot of polls and economists have said that China, of course, is the hardest hit in all of this. And back here in Nigeria, the National Bureau of Statistics has launched a new system to track daily prices of key food items using crowdsourced data from markets and stores across the country. Unlike the monthly CPI, this new approach collects prices every day from a wide range of outlets nationwide and updates the results on a public dashboard. The Bureau says that the move will improve accuracy in price reporting and is asking Nigerians to take part by submitting price data and feedback, making the platform a more inclusive and transparent tool for economic insights. You can be sure that we will follow up on this and let you know how you can contribute to this so we get real time and real price of food and others in Nigeria. Some corporate now shareholders of Zenith Bank PLC have approved a final dividend of 4 naira per share at the company's 34th annual general meeting that was in Lagos. The approval brings the total dividend for 2024 financial year to 5 naira per share, amounting to 195.67 billion in total payout to shareholders. The chairman and founder of Zenith Bank PLC, Jimovia, expressed appreciation to shareholders for their continued support, which he says has contributed to the bank's performance over the years. In her remarks, the Group Managing Director, Chief Executive Officer, Adora Omoji, thanked shareholders for the confidence reposed in her leadership, noting that this was her first AGM as the bank's GMD CEO. She assures shareholders of the bank's commitment to sustained growth, stating that dividend payment would continue to increase in line with the bank's performance. The chairman of the Trusted Shareholders Association of Nigeria, Otumba Mukhtar, is also praising the bank's consistent dividend history. He says the 5 naira dividend payout, including a profit before tax of 1.3 trillion, reflects strong financial management and shareholder value. For the 2024 financial year, Zenith Bank reported 138% increase in interest income driven by investments in high-yield government securities and growth in its loan bank. Gross earnings rose 86% from 2.13 trillion in 2023 to 3.97 in 2024. Customer deposits also went up 45%, and total assets went up 47% for the period. Well, we're still staying with corporate. MTN Nigeria's unaudited earnings for the 3-month ended March 31, 2025 shows a profit of 133.683 million naira. However, their total comprehensive profit for the period is 133.714 million naira, and this includes items classified either as profit or loss, such as fair valuation gains, losses on investments, and the company's total revenue for the period reached 1.03 million naira, an increase of about 40% compared to the same period in 2024. And according to their post on NGX, Nigerian Exchange Group, revenue, which comprises data, voice, digital, and other services, contributed significantly to the overall revenue. Now, the UK's Manufacturing Africa program has signed a strategic deal with London-based investment firm TLG Capital to help Nigerian manufacturers access funding and grow their businesses. Through the partnership, Manufacturing Africa will support Nigerian companies with due diligence, ESG compliance, and operations support. As part of the agreement, TLG Capital confirmed a first close of $75 million for its Africa Growth Impact Fund 2, backed by IFC and other global partners. The fund aims to reach $200 million.
The beginning of 2000, in 2003, I had the
Look, one of the key things that the government has talked about and that policymakers in Nigeria have always talked about is removing the reliance on oil and gas and trying to make Nigeria a more broad-based economic powerhouse. And so if you want that, you need manufacturing. And not having that broad-based manufacturing output that is what drove the South Asian tigers, the Southeast Asian tigers, etc., is something that I think Nigeria needs to really work on. And I think this is what Manufacturing Africa and TLG are coming together today to try and help. This is not a one-stop-all solution. This is not a one-size-fits-all solution. But again, I think by combining the structuring expertise, the financial flexibility, and the operational excellence that Manufacturing Africa can bring to the table, you're giving a solution to SMEs that have hitherto not had that ability to do so.
Well, closely related to the needs by manufacturers is the urgent need for improved partnerships and more deliberate policies that recognize and empower high-quality local manufacturers in the country. This was the main thrust at a press conference that was held in Lagos, addressing critical issues surrounding local content inclusion, challenges faced by Nigerian manufacturers, and policy interventions needed to ensure that Nigeria's renewable energy investments also promotes domestic industrial growth. The managing director of the Rural Electrification Agency, Mr. Abba Aliyu, who was speaking after touring LPV technologies, disclosed that Nigeria's renewable energy sector is expanding despite global headwinds.
The LPV is the first integrated, vertically reintegrated renewable energy service company that has invested in the manufacturing, invested in the implementation, and also invested in talent, building talent pipeline in the country. This is something that the country requires. This is something that is in line with the renewed hope agenda of Mr. President, where we need to enhance the country's gross domestic product by deliberately investing and localizing some of this value chain within the country. This is Nigeria to the world. This is ensuring that we have in Nigeria products that can compete globally. And I'm saying this on record that the product being produced by this local company, LPV, here in Lagos, Ikotun, is a product that can compete internationally with any international company. And they have what it takes to address or to contribute to addressing the electricity access challenge in the country. I'm very happy to be a Nigerian, seeing this kind of investment being done by Nigerians, and I look forward to continuous collaboration between Rural Electrification Agency and the LPV.
For the chairman of the LPV Technologies, the visit is a testament to the company's world-class production facilities, stringent controls, and premium-grade raw materials.
The beauty about solar, I always say to people, having had some background in the power sector, is that it can be deployed literally anywhere without the concerns of transmission and distribution, as it were. You can go to the remotest village in Bayelsa or in Maiduguri and deploy a mini grid there and give people light. people often wonder when people say that what's the biggest challenge in Africa, especially in a country like Nigeria, sometimes you hear people talk about corruption. And I often laugh and I say to people that, well, corruption did not stop the likes of Burna Boy and Whiskey from excelling in what they do. What the biggest challenge is in this country, to my mind, is energy security, the availability of power. And that's what we have set up to try to address. Because with the cost of diesel and the effect on the environment, we feel that if we are able to provide alternatives, then people can, affordable alternatives, working with multilateral agencies and our financial sector, and especially our partner here in the Rural Electrification Agency, we think that we can make our own little mark in the sector.
Unlocking the future of digital payment. Value of acceptance, brought to you by Visa.
Discussing value of acceptance. Now let's share some findings by Visa. So Visa finds that in their report for 2025, they found that 83% of merchants in Nigeria believe that digital payments are important investments for growth. They also find that the lack of digital payments adoption is hindering sales growth for cash-only SMEs, and 44% of these businesses report lost sales because of customers not carrying cash, emphasizing the need for digital payments. And then familiar payment models in Nigeria, of course, we know ATM, account to account, but this can be strengthened too through modern payment technology, like contactless payments, digital wallets, biometric authentication, and so on. Let's discuss more about this now with the Chief Executive Officer of Semicolon, Mr. Samuel Emmanuel, joins us from Dubai. Mr. Emmanuel, good morning and welcome to the program.
Good morning and thanks for having me.
So let me first of all ask you, as an active player in the digital payments fintech space, how would you rate the level of improvement and acceptability of our ecosystem, our payment ecosystem?
Thanks. I mean, if we look at the transitions that we've been seeing in the economy more and more into services, and specifically more and more into digital services, those have also been enabling and helping drive the increase in adoption of electronic payment services or digital financial services. And as those happen, essentially, it means that people are having more opportunities to pay for things digitally, which means that the players in the industry now have a lot more sort of, let's call it demand that they need to address, which then means that they need to make a lot more investments in the underpinning infrastructure that is essentially enabling those services. So all in all, I think as businesses have digitized their offerings and digitized the channels through which their customers access those offerings, it has created more opportunities for digitization of financial services, which in turn has helped many more players invest in the infrastructure. And of course, we can't forget the fact that Nigeria as a country through the CBN has of course been promoting and pushing the cashless initiatives.
Yeah, but some people still believe that cash is king. Have we been able, or are we making a lot of progress in eroding that perception that cash is king?
We're making progress. Of course, cash is king in the sense that, there's cash, there's debts or credits, as the case may be. So you can have cash, i.e. in the bank, you've got money. And so the point is that we're actually transitioning more and more people to saying that they can still they can still consummate transactions not using cash. Of course, a lot of the adoption has been more in urban areas. I was still speaking with somebody some weeks ago where he was saying in his village there's no service point and people still have to travel quite a far distance. But despite that, because if you look at the statistics that NIBS shares quarterly and annually, we're still recording about 88, 89% in terms of volume and value of transactions that are going digitally or through electronic channels. So we are definitely making progress. And at the same time, we still have quite a large number of people that have not been reached. So it's a mix of both, but definitely we are making progress.
So when Visa says that they find that about 50% of merchants prefer to receive payments digitally, I guess they are not talking about the open markets, or those, as you noted, those in the rural area, even in a state like Lagos, some parts where they don't have those points. So, I mean, what do you think about this 50% of merchants prefer payments digitally?
So one of the things that we still need to acknowledge and address is the cost of financial services is still a lot higher than what it needs to be. In many cases, people are paying to pay. So if I want to pay a merchant for something I'm buying, I'm paying for the thing I'm buying, but I'm also paying him for buying what I'm buying, if that makes sense. And so that cost of transaction, the cost of the payment services, is also part of why people are trying to avoid some of these digital solutions. Because if I have cash and I need to pay somebody 1,000 naira, the total that I'm going to give that person is 1,000 naira. If I pass it through a digital channel, it will be maybe 1,000 naira, 1,025 naira, or 1,050 naira. And if the transaction value is slightly or much larger than the 1,000 naira example, the cost of that transaction becomes a lot more. And so for people who are on a budget, for people who are sort of managing their finances, they notice these associated costs of transactions. So I think that's part of what is being referred to, that merchants look at some of the costs that come with them accepting digital payments, and so they try to avoid it. But again, the other side of it to note is there's a risk of taking cash that is reduced once you go electronic, right? And so I think those are some of the things that are not fully considered when people are looking at all of those.
Like we would need the intervention of the regulator, to make it more attractive and less expensive.
The investment in the technology infrastructure that supports many of the financial services, the cost of those things are expensive. And the cost of those things, one, they're expensive. Two, they're typically denominated in foreign currency. Meanwhile, the revenues that the players make are in naira. The regulator has already sort of intervened and provided some caps above which the providers cannot go. So the issue is that I think there's still some business model reconstruction that needs to happen, because if you're doing payments, it's essentially volume business. It's a volume game that you need to be able to process at certain volumes for you to be able to cover a lot of the associated costs. So I think the regulators have tried in terms of helping to bring down the cost. I believe they're still looking at ways to do that further. But then for the operators themselves, they are also facing the reality of what it costs for them to provide that service. And so there has been a proliferation of providers in the space, and maybe at some point some consolidation may help with the economies of scale to then start helping with the margins that essentially will help drive down the cost.
All right, so this also finds that between 2015 and 2019, increased usage of payment cards, debit card, credit card, and all of that added about 245 billion to global GDP across 70 countries and territories. I wonder if we have an idea how much of this came to Nigeria or how much more we are missing, because of some of these things you've talked about in spite of the intervention of the regulator?
Yeah, so in terms of what percentage of that came to Nigeria, I'm only going to do a guess or do some extrapolation. But as I said earlier, if you look at the trend over the last few years, NIBS has been sharing some data. Essentially, the digital payment space has been growing 88, 89% year on year. And so if we use that to extrapolate, easily that $245 billion that Visa is reporting, I think they said it was across 70 countries. Easily, Nigeria should have seen somewhere between $500 million to $1 billion of that as a net benefit to Nigeria.
All right, and then some of those familiar, forms or platforms that are being used, but it does seem like the contactless payment is we're not getting it in this country, at least not spreading as much as one would have thought. What do you think is going on with that?
Yeah, contactless. I mean, when you look at the payment sort of landscape, and you think about converting people from cash to electronic payments, then of course we need to start thinking about what are the channels through which people are going to do it. We've gone through telling people to do transactions via the web. We've gone through telling people to do transactions using USSD. We've moved on to now many people doing transactions through mobile apps. And so contactless payments, whether it's using cards, whether it's using devices, is essentially sort of part of that journey of evolution that already it took us a while for us to even get people comfortable with adopting a number of the electronic services. But if we just continue to let things evolve in their natural course, the contactless will also essentially come to fore. That it just takes time in terms of adoption and in terms of people getting comfortable, because of course it's money. And one of the things that we need to acknowledge is that the incidence in terms of volume and value of fraud in the system has been kind of high. And so for those reasons, some customers have some, let's call it palpitations when they're doing certain transactions, which may also be a factor in what methods or channels they choose to adopt. But I believe that as we carry on that journey of evolution, contactless would also become a major part of the landscape.
So how long do you think, Mr. Emmanuel, it will take us to have these forms of digital payments, especially in our open markets? Many years ago, when I went to South Africa, in the open markets, you can do digital payments. You don't need cash. But I mean, you mentioned one factor there, the issue of trust, of adoption. That's one of the hindrances we have to face. But how long do you think, how many more stages do you think we would go through where we can actually have a cashless, truly cashless market? I'm talking about the informal, because that's the biggest part of Nigeria's economy.
It is already happening. It's just not happening directly. Because what you see now, I mean, you can try this out. You go to any market, Oshodi, Oyibo, any major market, and you want to buy things in the market, and let's assume you're going to be spending up to 100,000 naira. The person you're buying from may, like you were saying earlier, say, no, I'm only accepting cash. And what you're going to find is there will be a money agent very close by. You go to the money agent, you collect the cash, and then you give the cash to the seller. So two things: that one is that the uh, digital payment is already a form of transaction in the market. The issue is that it's not a form of direct, or if you like, a peer-to-peer transaction, that there's still a middleman in between. So really the question is, how long will it take us before we no longer need the middleman? Because in fact, uh, the middleman being there is part of what's also adding to the cost of transaction. And so the I guess the reliability of the systems, the trust level that people continue to gain over time will lead to us not requiring as many uh, middlemen. And then that would then lead us to this stage where you can then do the transaction directly with the seller versus through. So my point is there are two stages. There's a stage where you're going through an intermediary, and then there's a stage. So the first stage is already happening. We just need a bit more time. And so when you say how long before we're fully there, I'm going to certainly, I think it will be on less than the next 5 years. If I'm going to do a strong wager, I'll say 2 to 3 years.
Well, that'll be beautiful, I tell you. But I guess we also have to look at the reality of our payment structure, infrastructure in that ecosystem. Sometimes we do know what happens, with all of those payments, and that is also, at the bottom of some of those distrusts in adopting some of these new or digital services or systems.
Yeah, so some of the issues around trust is not just fraud, it's also the tendency that I think that's part of what you're alluding to. If there's a transaction failure, the amount of hoops people need to jump over for them to get the transaction reversed or get their money back. And if somebody is trying to do a transaction and it's worth 5,000 naira and they've just got 5,500 naira in their account, if for whatever reason something goes wrong with that transaction, they don't have another 5,000 to do that transaction again. And so if it takes days for that transaction to get reversed, the person is essentially stuck for a while. And so part of the evolution and part of the things that we need to address in relation to the infrastructure is the reliability of transactions. Reliability in terms of we can consummate one way or another. If it is successful, it is consummated successfully. If it has failed, we consummate it as a failure such that the person that initiated the transaction does not have a loss of value or value hanging in limbo for an undetermined amount of time. So I think those are some of the critical sort of frictions that are inhibiting people from essentially going all the way with adoption.
All right, thank you so much for your insights, Mr. Samuel Emmanuel, Chief Executive Officer of Semicolon.
Thanks for having me.
Let's take a break, we'll be back.
Unlocking the future of digital payment. Value of acceptance, brought to you by Visa.
Welcome back to watching Business Morning here on Channels Television. Well, it started yesterday, the Nigerian Communications Act, being hosted by the Federal House of Representatives on Communications in collaboration, obviously, with the Nigerian Communications Commission. The meeting started yesterday here in Lagos, and stakeholders have been meeting on the theme 22 years after reassessing the Nigerian Communications Act, looking at the challenges, opportunities, and future directions for a digital Nigeria. We have there has been in that meeting since yesterday, has taken out some time to be with us this morning. Well, not in the studio, he's there at the venue, but joins us virtually, the president of Association of Licensed Telecoms Operators, Engineer Agbenga Adebayo. Engineer Adebayo, thank you so much for taking out time from that. I know you were so busy being part of all of the sessions and all, so thank you so much for taking out time to join us on the program.
Thank you for having me. Good morning.
Good morning. So 22 years, obviously there's a need for assessment and reassessment. What has the conversation been about since yesterday when this started?
Thank you. We have seen in the last 22 years rapid development in the sector. We have seen innovation and technology. We have seen financial inclusion. We have seen mobile communication development. We have seen artificial intelligence. We have seen beyond that also with various generations of mobile services. We started from 1G, 2G, 3G, 4G, 5G, and now we're talking about artificial intelligence and much more. But the Act as it stands does not reflect the realities of modern technologies. So the provisions of law as we stand today does not adequately encompass all the services that are provided by communication services. And this informs a need for us to have a review of the Act. And we're grateful for the Federal House of Representatives for calling this colloquium. We've all been here putting heads together on what has to be done, where we are and where we're headed. The potentials are very high, the opportunities are huge, but the law and the operating environment has to be right for us to maximize the potentials that we have in the sector.
So, I mean, what are the highlighted areas? I know that, you know, when the conversation of tariff hike for telecommunications came on, some of the conversations that came up was truly having a deregulated telecoms sector, especially when it comes to areas of billing. I wonder if that's part of the conversation now, and what are the other areas, you know, that are being brought up?
We had discussions around the independence of the regulator. The Act allows that regulators should be dependent on political interference because they do have the mechanism for sustainability, for managing tariff and the rest of it. So part of what came to the fore is to emphasize in the review of the Act the importance of the independence of our regulator and interference we're having from other across sectors and also from subnationals. Whereas telecoms is said to be in the exclusive list of the federal government, we're seeing a lot of interferences at the subnationals. Different states have different laws in an attempt to regulate communication services. So we're also having a conversation around how to insulate the current Act and the revised Act to prevent interferences from different actors across the various subnationals.
Okay, so this is like an initial part of modernizing the law, I believe, because there's so many stakeholders that are involved. So I wonder, how long does this take and what should be the next stage?
It's a journey. First, as it is said, a problem known as a problem solved. We've come to identify that the law as it stands today, the Act is old, it's 22 years old. We're regulating digital services with the analog laws. That has been established. So the journey has started. The first port of call is to speak with stakeholders, which the legislators have now done. We expect that a joint committee will be constituted that will accommodate all other interested parties, all stakeholders in the ecosystem, to be able to come up with a robust revised Act that will not only protect the sector, but will also protect consumers and as well as look at future opportunities and the potentials of where we will be in another 5 to 10 years.
So the issue of vandalism of equipment is also one issue that has come up. I wonder if conversations are covering that area and how it may seem to get a solution, lasting solution for this.
Yeah, we're also seeing that the provisions of penalty and penalty for infractions in the law does not reflect adequately the impact of vandalism and vandalization of our infrastructure. So part of what is also being considered is what I would call the penalty matrix, where people interfere with communication services, what will be the consequence for this, including possibility of prescription of long-term jail time for vandalizing infrastructure and the rest of it. More than that is also that we're seeing also how we can improve this Act to be able to accommodate issues of service improvement and quality of services, because a lot of things are involved, other than the role that is to be played by the legislator. There are roles to be played by our regulator and other cross-sectoral regulators that have to do something to do with communication services. So we're looking at how best this can be made more all-encompassing to be able to accommodate issues of redress when we have issue of quality of services, what is to be done by the various stakeholders, what should be and what should not be. Because as technology evolves, also the rules are changing. Also the rules of engagement are also evolving. In that regard, there's also a need for us to have commensurate legislation that will accommodate all of these variables as we progress in the sector.
Another area of interest would be, I believe they call it the right of way, where you have to pay to the state government to be allowed to install some of your equipment. I think the NCC has been able to get the buy-in of some state governments, and so in some states it's free, in other states you have to pay. I wonder if that's part of the conversation also.
Well, we're not going into the details of what happens by way of approval for right of way and the rest of them, but what we are talking about mostly is in the exclusivity of communication services, because this is in the exclusive list of the federal government. And what we need to do is to strengthen the laws so that the interference of subnationals on our operations is completely eliminated. The current act allows that while we receive federal approvals by way of licenses from the National Nigerian Communications Commission, we're also obliged to comply with local rules and regulations in terms of planning, laws, and the rest of it at subnationals, which is understandable. But the problem we are seeing and we're having, which is also part of the conversation we're having, is that in an attempt for the states, the subnationals, to regulate what should be physical and urban planning, they're getting involved in things like how businesses operate. They're doing things that impact and interfere with smooth operation of communication services. Attempt to collect revenue from operators often lead to site closure, seizure of equipment, closing of operators' offices, and the arrest of communication workers and the rest of it, which actually should not be, because that's having direct interference with smooth operations of communication services. So we need to strengthen this act such that even while the subnationals have responsibility for planning, they will not have reasons to impact on what is being done by operators. And necessary connectivity has to be available, irrespective of what the stakeholders are doing. We need to ensure that operators are not impacted by decisions of local actors by way in an attempt to collect revenue and the rest of it. So these are part of the conversation that we're having. There's a need to strengthen the law. There's a need to defend it, to defend us against interferences at various levels. And that's about the only way we can have sustainable services.
All right, thank you so much. I guess we just have to let you go back into the meetings there, and hopefully we'll be able to get you out at the end of everything to get more information on deliberations. I hope by then we will be able to have you in the studio. Engineer Adebayo, can we get a promise on that?
Yes, we'll do so. Thank you very much.
All right, thank you. Looking forward to it to get more details. The president of Association of Licensed Telecoms Operators in Nigeria. Thank you so much, sir.
Thank you. Thank you for having me.
All right, let's go to the global space now. British house prices fell by 0.6% in April compared with a forecast for no change as a discount on property transactions ended. Data from mortgage lender Nationwide showed this. The figures also show that house prices were 3.4% higher than a year ago, lagging a consensus for a 4.1% annual increase. The 0.6 monthly drop was larger than all forecasts that an economist had expected, which had pointed to a flat monthly reading after prices stagnated in March. And German retail sales fell and import prices rose in March, according to data published today, pointing to higher inflation ahead of persistently weak consumption. German retail sales decreased 0.2% compared with the previous month. The Federal Statistics Office showed this after a prediction of 0.4% decrease. Although the unemployment rate remains relatively low and real wages are developing positively, retail sales have fallen from a low level. To avoid a third year of contraction in 2025, economists agree that boosting consumption in Europe's biggest economy is crucial. U.S. President Donald Trump's tariff offensive is threatening two-way trade between Germany and the United States and risking major damage to an already limping German economy. And closely is in France. French consumer prices have risen more than anticipated in April, as a further fall in energy prices was partially offset by the rise in food prices. Preliminary data statistics shows this. France's harmonized inflation rate, adjusted for comparison with other Eurozone countries, increased 0.8% year-on-year in April. According to a Reuters poll of 21 analysts, had on average expected a rate of 0.7%, with estimates ranging from 0.5 to 1%. And still in France, the economy grew slightly in the first quarter, as stagnant domestic demand and weak foreign trade were offset by companies rebuilding inventories. Preliminary data also indicates this. The Eurozone's second biggest economy grew by 0.1% in the first 3 months of the current year, after a slight drop of 0.1% in the fourth quarter of 2024. And economists also have their eyes on this. Well, away from France, but still in Europe, Hungary's economy unexpectedly contracted in the first quarter because of an industry slump, highlighting the country's trade exposure even before the U.S. President Donald Trump's tariff on global economies. Gross domestic product dropped 0.2% from the fourth quarter of last year and was flat on annual basis. The Budapest-based statistics office said that the median estimate survey for 0.4% growth for both quarterly and annual GDP. President Donald Trump's tariff prompted several of Europe's largest automakers to scrap financial guidance underlying the extent of the chaos unleashed by fast-changing trade tactics. Jeep owners Stellantis, NV, and Germany's Mercedes-Benz Group today withdrew their forecast for this year, citing the duties were upending supply chains and driving up prices of cars around the world. Volkswagen also has its outlook largely unchanged, but one that it didn't factor in the impact of the levies. And talking about the tariffs, let's find out how it's going in Canada, one of the first to be hit by Trump's tariff. And we're doing this with the Chief Executive Officer of Africa, Canada Trade and Investment Venture, Mr. Kenneth Oguzie. So Mr. Oguzie is in Washington this time, but he lives in Canada and will tell us, what's going on there. Mr. Oguzie, good morning and welcome to the program.
Good morning and thanks for having me.
Great. So how is this biting Canada on individual retail consumers level?
I think the tariffs, in terms of the impact of the tariffs, I think it's something that just keeps unfolding as the day progresses. For starters, the outlook is not the best. Because if you think about what tariffs are, which is typically just taxes imposed on importers in terms of goods that are not locally produced. So typically when you do that, some of the things that are likely to happen, like we have seen in the past, would be, the importers might end up slamming the extra taxes costs on consumers, which then drives up the prices of those goods. So ultimately, the consumers have to pay more. So when you think about that, then what does that mean? Then individuals have probably less money in their pocket. So looking at that, long term, you could look at things like slower economic growth, because what then happens is people are less likely to buy more, and then of course poverty rates increase and all of that. So right now, from a forecast standpoint, except some of those tariffs are really looked into and maybe adjusted a little bit, it's not a good look from an economic standpoint. And, countries are sort of running around now trying to see how can we create some sort of interim measure to really help mitigate the impact. But how much really can you do? So these are some of the ongoing conversations around it.
Yeah, so I think one of the things countries are also doing is changing their trade partners and trade routes. I wonder how Canada is handling that.
So in terms of Canada, when you think about a country like Canada, U.S. exports, for example, make up 21% of the GDP. So you would probably look at alternatives. Canada is looking into countries like continents like Europe, looking at places like Latin America and all of that. But the bigger problem is that U.S. is a big trade partner for Canada, and it's a big market. So when you talk about the volumes of consumers in terms of how much you sort of push to that country, can you really match it? The best you can do is just to sort of mitigate it, So no matter how much Canada is looking in terms of diversifying its trade partners, the US still remains a very, very significant portion. And it's not very likely that they can manage that volume of trade, which they typically push out to the US. So I know right now there's a lot of conversations, sitting down with the European Union, thinking about, what are some of the ways they can work together to ensure that they sell a bit more to each other. And of course, the most important thing, managing that balance of trade, which has been one of the concerns President Trump has typically highlighted as one of his reasons for putting up these tariffs, especially around Canada, that there's too much trade deficit in terms of vice versa. But of course, you can understand as well, because when you look at crude oil, which is one of the and energy as well, which are some of the key components that Canada has been pushing to the US, those things are really high volume items or tokens. So it's really difficult to sort of get that balance of trade to be very favorable, especially when you are playing in certain spaces. So diversification is a big conversation, but what remains is how much can you really ensure that you are at least close to what you had before with the US in comparison to all the other smaller markets like the US or the European Union or maybe Latin America or any other region.
All right, Mr. Aguze, just hold your thought for just a minute because for our DSTV viewers, there's an event, a Stand to End Rape initiative on women's representative in politics. That's an event that's holding in Abuja at the CBD Abuja, and that's where we'll be leading you to. That's our DSTV viewers, but on our other platforms, local platform and Channel 24, the UK, we're still right here. And if you're watching on YouTube, you can just jump to the next platform and you'll see us here on Business Morning. Now, Mr. Aguze, you talked about, the bigger markets. One of the conversations that has come out of all of this tariff is the potentials or the opportunities that it opens to a continent like Africa. Do you see that coming to bear anytime soon between Canada and Africa?
Well, I mean, there are different stances around this. People have seen this in various ways. Of course, most of the work we do is really looking into ways to grow that sort of volumes of trade between both regions. That's Africa and Canada. But there are a lot of questions. Typically, one of the criticisms some people have made, especially around, let's just talk about like exports from Canada to Africa, for example, is the fact that most of the Canadian products, they are very premium. So premium in terms of the price points, they play more quality, but they're not the best in terms of competing on prices, which sometimes might be a struggle in Africa. Of course, we have the growing middle class and all of that, but I think a lot of times businesses that have been successful in the region has been businesses that sort of been able to adjust their prices to reflect the realities of the local people. So it's left to be seen in terms of, are there some areas that Canada itself can actually look into how it could tweak some of the products to ensure that the markets, there's a favor. But then when you then look at from the African side as well, there might be opportunities for African businesses, to be able to start playing into Canada. Now, what that looks like is also another conversation, because at the end of the day, it's about thinking about what are the right products, looking at things like quality control and what have you. But one thing I know for sure is that Canada is sort of strengthening relationships with older trading partners, not too much about new partners. That's not really what I want to see. And, we're advocating for that a lot because we think, what, this is an opportunity to start growing or strengthening the relationship you have with Africa from a trade standpoint. But what we have seen in terms of movement from stakeholders has just been sort of, okay, yeah, we've been trading with Europe in the past. Let's see how we can grow that trade or, sort of adjust or tweak it or sort of increase the volume. But another thing that is left to see is that, we just had our elections here in Canada, so there's a new prime minister, and the hope is that, or the expectations is that by the time he starts putting his cabinet together, there might just be that opening of conversations around Africa again, because of course you had the Africa strategy, Canada-Africa strategy, which was released about a month ago. Not the best strategy, was still strongly aid focused, which has always been a big criticism in terms of Canada's engagement with Africa. But just to cut just to bring it back, I think no one really knows. But I think all the stakeholders just typically have to keep sort of magnifying that conversation or that message in that, Africa is ready for business. There are numerous opportunities. Even if you don't want to play across the whole Africa, pick up some critical regions, critical economies, big economies like Nigeria, Kenya, and South Africa, and you could actually use those to, close those gaps in terms of some of the imports you have actually started missing because of the trade, the tariffs wars going on.
All right, thank you so much for your insights this morning, Mr. Aguzie. Mr. Aguzie is the Chief Executive Officer of Africa-Canada Trade and Investment Venture.
Thank you for having me.
Well, a bit more on that. China's used cooking oil, that's UCO export to the United States, its largest buyer, are set to plunge in the coming months because of steep tariffs, forcing sellers to divert shipments to Europe and elsewhere. This is according to industry players. The Trump administration now charging 125% import tariff on Chinese UCO from this month. Shipments to the U.S., valued at $1.1 billion last year, are tumbling, with the last cargoes sailing around late March and early April before trade grinds to a halt. And China's UCO export hit an all-time high last year at nearly 3 million metric tons, and it's worth $2.64 billion. Away from that, in Thai, the central bank has cut its key interest rates by a quarter point for a second consecutive meeting that happened today in a move to support an underperforming economy facing uncertainty over steep U.S. tariffs. The Bank of Thailand's Monetary Policy Committee voted 5-2 to reduce the one-day repurchase rate by 25 basis points. And also, Xiaomi Core has debuted its first open-source artificial intelligence large language model, and it's called Mimo, joining an increasingly crowded stable of technology giants seeking to gain a foothold in the fast-growing industry. The launch of this new model saw Xiaomi's shares surge 5% in Hong Kong trade. Well, that's the package for Business Morning this Wednesday. I'll see you at 1 p.m. for updates from the world of business. I'm Ini John Mekwa. Talk to you later.